A very good afternoon to you. Let's take a look at the markets. Asian markets started the session off well, but ended in negative territory. Some attribute this to anxiety around tech giant Nvidia's results numbers that are coming out later in the day, and warnings from some quarters that US markets could still correct by a further 20%. While in Japan, market players await the launch of a 40-year bond auction. The Nikkei share average closed flat. The Hang Seng index declined by 0.53%, while the Shanghai Composite Index also ended flattish, down 0.02%. US stocks ended the session higher yesterday. This as investors were cheered by President Trump's delay in imposing tariffs against the European Union, while a rise in consumer confidence also served to boost investor sentiment. The Dow Jones Industrial Average advanced by 1.8%. The S&P 500 rose by 2%, while the Nasdaq Composite Index gained 2.5% at the close. Looking at local indicators, we see that the all-share index is up currently 0.4% at 94,199 index points. On the currency front, we see that the rand is trading at 17.86 against the US dollar, 20.22 vis-a-vis the euro, and 24.12 against the British pound. On the commodities front, we see that gold is trading at $3,319 an ounce, platinum at $1,095 an ounce, while Brent crude oil is at $64.03 a barrel. All right, let's get into it with Zwelakhe Mnguni. He's the CIO, the Chief Investment Officer at Benguela Global Fund Managers. Thank you very much, Zwelakhe, for joining us. So global markets are looking mixed currently. The US was up, but Asian markets closed in the red. How are you seeing things currently in terms of the drivers of the market?
There is a major factor about the de-escalation of Trump tariffs. I think it's driving a good part of the market's positive sentiment. We are also seeing that result coming out. There is Nvidia expected today, but certainly there is the trade decisions or the trade de-escalation is a major factor driving the markets.
So Zwelakhe, of course, here at home, we are expecting the Reserve Bank to make its call on interest rates. What is your expectation tomorrow and why?
I don't know if my expectation or my hope, but I believe that they will cut maybe by 25 basis points. I think all the indicators are aligned. I mean, inflation is under control. I don't think there is any major factor on the horizon that could justify keeping interest rates at an elevated level, primarily because once this trade de-escalation has changed direction, it is a tailwind for having lower inflation, supportive of the rand. So I think we will expect to cut
So Zwelakhe, today we had Anglo-American Platinum list on the JSE as Valterra Platinum on the JSE, with a secondary listing on the London Stock Exchange. What are your views on this particular company? Is it strong enough to go on its own? And what's your take on the prospects for the PGM sector in general?
The company is very strong, and in fact, it reminds me of the Telkom-Vodacom split. The company is in a strong position cash-wise. I mean, still generating 8.4 billion in a market where the PGM prices have been under a lot of pressure. So it is certainly a business that is strong enough to stand alone or on its own. But in terms of the PGMs market, I mean, we have seen predictions that the market is in a deficit. So the supply and demand are in a negative balance, and that is supportive of the PGM prices. So we are likely maybe to see more price declines from these levels, and that would be a tailwind from here for these companies in the PGM sector. So I'll be more positive about the PGM sector, although the vehicle sales have been under pressure lately globally, I do think that they will recover and stabilize, especially if we see a rate cut in the US.
Yeah. So earlier this week, we had Pick n Pay release their annual results, reporting a marked improvement in the losses that they've been incurring. And Pepkor also came out with their half-year results for the 6 months ended March 2025. I wanted to get your insights on these two consumer-facing stocks, even though they're telling us about what happened in the past, given that we were not able to look at them with other analysts this week. How are they doing, and how are you seeing the consumer in the South African economy?
Look, I think at a consumer level, I mean, the consumers are holding on tight. I think we are seeing, for example, on the Pepkor side, they did much better than the average retailer, primarily because people are trading down at times like this when there is tightness in the economy. So their growth in the clothing sector, I think, was up about 8%. I think if you look at Pick n Pay on the other side, it was a lot more muted. I think on their own, they grew about 2%. They grew their revenue about 2%. I think some of the things that have helped Pick n Pay to improve the losses it has been the cut in cost. They've managed to reduce their cost by about 2%. So I don't think they're out of danger yet. I think they still have to do a lot of work around bring the cost down and redefining the proposition to their customers. That is their biggest problem. Their biggest problem is that customers don't have a strong value proposition that attracts them to their stores. And that way, they've lost market share to the likes of either Woolies or Checkers.
Indeed. Thank you so much, Zwelakhe, for your time and insights. As always, that was Zwelakhe Mnguni. He's the Chief Investment Officer at Benguela Global Fund Managers.